Hello, everybody. How are you all doing? All good? What's up with you all? Hello, good evening, Preeti. Hello, babies. Yeah, how is this name? Babies. I'm good, Preeti. How are you doing? Hope everything is well at your end. Good evening, babies. Difficult to pronounce. Yes, welcome everybody to today's class. Good evening, good evening. Hello. Doing good, that's wonderful. Have you come revised for today's class? Come one, come all. So let us start. Hello, Priya. How are you today? Welcome to today's class. Chalo. I'll wait for one more minute so that people can join if at all there is anyone. Let your group know. Are you all able to hear me properly? Is the voice audible? Am I visible and audible? Please let me know in the chat box. Yes, everybody. All good. Audio is perfect. Video is perfect. You all are perfect. Hopefully, I am also perfect. So, let's start today's class. So, today we are supposed to study a chapter by the name of Public Finance. Audible and visible. That's wonderful, Priya, Preeti, and myself, Pritesh. So, beta, can I say finance is related to money? And when I use the word public finance, it is the finance of the government. So, what are we going to discuss in this chapter is the finance of the government. Now, just the way a person requires finance, just the way a company or a corporate requires finance, the government also requires finance. Why does a person require finance? Because a person has unlimited wants and the resources to satisfy those wants are limited. So as a human being, I have so many wants. I want a car, I want a bungalow, I want a villa, I want to go on a world tour, I want a latest mobile phone, I want to go for movies, I want to have a car, I want to own a private jet. There are so many desires that I have. Acha, I am not alone. I am married. So I have a wife who is even more greedier. So she also wants a diamond ring. She wants me to give her clothes. I have a child, so there are expenses on my family. And we all know that human wants are greater than the resources available. So there arises a problem of scarcity. The way a person faces the problem of scarcity, the company, corporate will also face the problem of scarcity. A company to operate, to run its business requires a finance. So do we also require finance to run our economy? Yes or no? Is finance important to run the economy? Definitely. We have expenses on defense, railways, airways, waterways, health, education, dams, canals, police, law and order. There are so many expenses that we are supposed to make, but government does not have enough resources. So the universal fact is that there is a problem of scarcity. Wants are greater than resources. And because of that, we call this problem as a central economic problem. This central economic problem is faced by each and every country in the world. And that problem is of scarcity. So to overcome this problem of scarcity, the economies of the world choose one of the following three economic systems. So tell me, what are the three economic systems that you all are aware about? What are the economic systems that we have? What are the three economic systems that I am talking about? Absolutely correct. So can I say there is a capitalist economy, there is a socialist economy, and there is a mixed economy. And all these economy have a different way of operating and solving their central economic problem of scarcity. Because of scarcity, there are four questions which arise: what to produce, how to produce, for whom to produce, and what provisions are to be made for economic growth. So to know more about central economic problem, you need to go through chapter number 1, in which we have already discussed what are the central economic problems. Now, the father of economics, that is by the name of Adam Smith, always promoted a laziest fair economy. He believed that government is the best which governs the least. Government should not interfere in the operation of an economy except for playing three roles, or rather three functions. These functions are secondary. According to Adam Smith, private sector should play a primary role, and the government should play a secondary role. What is the role of the government? To maintain law and order, that is internal security. To fight external aggression, that is to fight against Pakistan, China, or any external threat that India has. And to provide certain essential commodities to the public, like electricity, water, sewage system, etc. So government should play a passive role in the opinion of Adam Smith. Adam Smith believed that government is the best which governs the least. And beta, if I have to talk about a capitalist economy, their main motive is profit. So he, along with many other economists like J.B. Say, believed that supply creates its own demand. Now, how will Preeti supply creates its own demand? So if there is supply, there has to be production. Yes or no? If there is production, there has to be employment provided to the people. Because for production, we require factors of production. What are factors of production? Land, labor, capital, entrepreneur. And if labor is employed, they will get remunerated. That means their income levels will increase. Once their income level increases, they will start demanding things. Because when we earn money, do we want to take it on our chest and go above? No, we want to spend. So Adam Smith, J.B. Say, and many classical economists believed that supply creates its own demand. But what happened in the year 1930 was the year of Great Depression. And in that, the supply did not create its own demand. The economies of the world were facing recession. That recession turned out to be depression. And it is known as the year of Great Depression in the year of 1929-30. So according to Adam Smith, supply should have created its own demand. But in the year of 1930, that did not happen. And the reasons for that could have been the World War, which happened in the year 1914. Then there was pandemic in the year 1920, 21. So the people of the world were scared. They did not want to spend all the money that they earned. So what they started? They started saving their money. And in the process of saving the money was not circulated in the economy in the form of consumption. So people were scared and therefore people started holding money. Therefore, demand was less. And eventually, what did we observe? Supply did not create its own demand. So, Professor J.M. Keynes said that this theory is old. This theory is no more valid in today's world. So, what should happen? He said that we should, rather than focusing on supply, should start focusing on demand. Now, he believed that demand creates its own supply. वक्त बदल गया, हालात बदल गए, जज्बात बदल गए, जिंदगी बदल गई. Time changed. And people now started believing that supply does not create its own demand. And if supply is not creating its own demand, then people in the world started believing that it should be demand which creates its own supply. And he proved, if there is demand, that means people are willing to spend. If people are willing to spend, then start producing. If you start producing, then you will employ people and you will increase the level of income of the people, which will automatically now create the supply for the commodity. So, can I say, before 1930s, Adam Smith's logic was practically used, that supply can create its own demand. But after 1930s, that did not work. So tell me, during the time of recession or depression, do you think private sector will make an investment? Yes or no? When there is a contractionary trend, when there is recession, when there is a trough in the economy, do you think the private sector will invest money? Tell me a yes or a no. Yes, I'm waiting for your reply. The answer is no. So if economy is in recessionary trend or a contractionary phase or facing depression, then who will come and save the economy? Hence, the role of the government was realized. Now people started believing that government should not play a secondary role, it should start playing a primary role. Government should not play a passive role, but government should start playing an active role. And therefore, Richard Musgrave said that government's role is of primary importance. And therefore, Richard Musgrave said that an economy needs to give government certain functions like allocation of resources. Then he believed that there should be distribution of income. And finally, in every economy, we require stability. A yes or no? Hello, Vasant. So, according to Richard Musgrave, government should play an active role or a passive role. The answer is active. If government should play an active role, what is the role of the government? Allocation, distribution, and stabilization. Why do we require allocation of resources? Because we don't want resources to be wasted. Therefore, there has to be optimum utilization of resources. And if in an economy wants are greater than resources, then private sector is obviously going to misallocate the resources. It will start using the resources where they get a higher price. Not everybody can afford higher price, and therefore government's interference is required. If private sector manufactures, they will manufacture merit goods or demerit goods. Demerit goods. Cigarettes, liquor, where they get more prices. But can I say they are not socially desirable? And therefore, government's intervention is required so that people get maximum welfare. And Richard Musgrave said that allocation is an important primary active function of a government. Not just that. Now, when we allocate resources, we manufacture goods and services. And the money valuation of all the goods and services is called as national income. Do you think India's national income is equally distributed or it is unequal? Good evening, Muguthan. Tell me, is the income equally distributed? No. In India, the rich is becoming richer and the poor is becoming poorer. So if rich becomes richer, poor becomes poorer, this is not the kind of economy that we want. So what should government do? Government should do distribution of income, because there is inequality of income or unequal distribution of income. So government charges progressive taxes. More the income, more the tax. Lesser the income, lesser the tax. Government will take more tax from the rich and distribute it to the people in the form of subsidies. Government will give free houses. Government will give free education. Government will give free health or medicines, subsidized medicines to the poor. A yes or no? Because of which there will be redistribution of income. So can I say, because we want optimum utilization of resources, distribution is for fairness. And then in a free market in a free market economy, there is a lot of instability. Now, Julie, free market means what? Free market means that there is no government intervention. So their motive is profit. There is private sector. There is no price stability. There is no economic stability. There is a rise in unemployment. Is that the kind of economy that you want? No. During the time of recession, can I say there is instability? And therefore, we want stability in the economy, which will be brought about by the government. Now, how does government achieve stability? So, every government can announce policies. For stabilization, there are two policies: monetary policy and a fiscal policy. Monetary policy is announced by the central bank, that is Reserve Bank of India, whereas fiscal policy is announced by the finance ministry, that is by the government. Can I say RBI announces policy to control money supply by changing the rate of interest? CRR, SLR, bank rate, repo rate. So monetary policy focuses on rate of interest in order to have an impact on the money supply. Whereas fiscal policy is about income and expenditure of the economy. That is tax and subsidies. So policy related to tax and government expenditure is called as a fiscal policy, and the policy related to interest rate is called as a monetary policy. And with the help of that, we achieve stabilization or stability. Yes or no, dear students? Are we clear? So in unit number 1, the name of unit number 1 is fiscal functions. And what are the functions according to Richard Musgrave? Should government play an active role or a passive role? Active role. Government should not only play a secondary role but also a primary role. Active role. A yes or no? So what are the functions? There is allocation function, there is redistribution function, and there is stabilization function. Do you agree? So in this chapter there is another part by the name of GST, which I believe everybody is clear with. GST means goods and service tax. There can be CGST, SGST, Union Territory GST, and IGST. So let us solve 5 to 7 MCQs based on unit number 1. So today we have to cover the entire chapter, and then we will also start with money and banking. Chalo, question number 1. Hi Faridul, hello Manoj, hello Julie. Hey, is everybody clear with the concepts of unit number 1? I'll give you 2 to 3 minutes to go through unit number 1. If you have any specific doubt, you can ask me. I will solve that doubt and then go ahead. Chalo, first, question number 1. Redistribution policies are likely to have an efficiency cost. Because of redistribution, can I say government takes from the rich and gives it to the poor? Now this discourages both the rich as well as the poor. Because if I am rich, I am earning, government taxes me. So I am discouraged to work hard and on. And if I am poor, government is anyway giving me everything for free. So I think, why should I work? So they create a disincentive to work and save. And therefore your answer is B. Then macroeconomic stabilization can be achieved by fiscal policy and monetary policy both. So your answer is D. Let's do question number 3 as well. Which of the following policies of the government fulfill redistribution? So subsidies is a part of redistribution. Your answer for question number 3 is B. Next, question number 4. Choose the correct alternative. Fiscal policy uses the change of taxation, correct, and government spending, correct. Whereas monetary policy involves use of price and profit, incorrect. Next, fiscal policy uses price and control, ayyo, illa. Fiscal policy involves the use of taxation and government spending, this is correct. While monetary policy involves the use of changes in supply of money and interest rate, even this is correct. So your answer is the C. Yes, everybody. So I don't know why people fear macroeconomics. It is so simple. You just need to have awareness about the concepts. Hey, did you all enjoy? Did you all understand? If yes, Rambanalla. Lovely. Next, we'll solve question number 8. I can solve 7 also, not a issue. When a government offers unemployment benefits and resorts to progressive taxation. So there is unemployment benefit and progressive taxation. Can I say progressive taxation is a part of redistribution of income? Therefore, your answer is B. The next one is question number 8. The government of Emily Land, it's just a name. They consider it as a country. So the government of a particular place decides to provide most modern road infrastructure throughout the nation. This is an example of allocation of resources. Therefore, your answer is B. Next is question number 9. Which function does the government perform when it provides transfer payment to support the underprivileged? So you are basically trying to alleviate people from problems and poverty. So again, this is a point of distribution. Therefore, your answer is the C. Are we all clear? So I am giving you 5 minutes. Go through unit number 1. If you have any doubts, please ask me in the chat box. 5 minutes. Unit number 1. Revise and ask doubts if any. There is one more part, but that is not very important, that I have not covered. That is GST. Hey, you all don't come revised, huh? You don't ask any doubts only. That's bad. You should ask doubts. So yes, I am waiting for your doubts in unit number 1. Last couple of minutes. Let me know if you have any questions in the chat box. If not, I think we should go to the next part. Okay, Preeti, that's wonderful. But if anybody else has any questions, I'll like to wait for a couple of minutes. How are your papers going? How are your mock tests going? I hope you all are performing well. I hope economics has become a lot more easier for you all because of the sessions carried out by Q. Yes, Vasant, Faridul, Preeti, Julie, Muguthan, Babies. All the best, Preeti. Do well. That's wonderful, Julie. Vasant, what about you? All right. Then I think we should go to unit number 2. Now, unit number 2 talks about market failure. So, sir, first of all, we need to understand what is market success. It's not called market success, but it's called as market equilibrium. So, when demand is equal to supply, we say that economy is at equilibrium. Everything will go well, Nityashri. Just keep working hard. Be consistent, be honest, be genuine. So, when is there a market failure? Whenever there is misallocation of resources, it is market failure. Whenever there is overproduction of something or underproduction of something, there is market failure. If everything is left to its own, that is to a free market economy, capitalist economy, they will waste the resources. They will produce more of liquor, more of cigarettes, more of alcohol, more of those things which are socially undesirable, and therefore there will be overproduction of few things and underproduction of few things. So if demand is greater than supply, I repeat, if demand is greater than supply, there is market failure. If demand is less than supply, there is market failure. If there is overproduction, market failure, underproduction, market failure, misallocation of resources, market failure, underutilization of resources, market failure, wastage of resources, market failure, underutilization of resources is market failure. So when is market at equilibrium? Whenever demand is equal to supply. Now, do you want the markets to fail? Do you want overproduction, underproduction, misallocation of resources? No. We want the market to be at equilibrium. Therefore, government's interference is required. Now, market failure can be of two sides. One can be demand side market failure. One can be supply side market failure. Demand side market failure occurs when the consumer wants a commodity but does not want to pay for it. For example, defense. We all want the services of defense, but we are not willing to pay for defense because we believe that when others are paying for it, why should I pay tax? So demand side market failure occurs when the consumer wants a commodity but is not willing to pay for that commodity. And supply side market failure occurs when the producer creates some or the other pollution which affects the society, which costs the society, but that cost of pollution is not included in his market price, in the price of the commodity. The producer will only charge for the cost of manufacturing his product. He will not charge the cost that he has caused to the society in the form of an pollution. So he should have actually charged you the cost of production plus the external cost, that is pollution, environmental degradation, global warming that the producer is causing. That cost should be included in the price of the product, but he does not charge that price. Then it is called as a supply side market failure. So Nityashri, can I say there are basically 4 reasons for first of all, market failure is the situation where there is overproduction, underproduction, supply is greater than demand or demand is greater than supply. When there is underutilization of resources and misallocation of resources, all these are the situations of market failure. Market is at equilibrium only at the point where demand is equal to supply. So demand is not equal to supply if everything is left on its own. That is a capitalist economy. Therefore, there is a need for government's intervention. There are 2 types of market failure. One is called as demand side, one is called as supply side. Demand side occurs because the consumer is not willing to pay, whereas supply side occurs because the producer is not able to include his external cost in the price. Now, there are 4 reasons for market failure. The very first reason is market power. Beta, can I say market power means a monopoly? A yes or no? Market power means a monopoly. Tell me, monopoly is a price maker or a price taker? Are there entry barriers or there are no entry barriers? Bolo. Tell me. Monopoly is a price taker. Monopoly charges higher price. There are entry barriers. Now, Preeti, if monopoly charges a higher price, not everybody can afford it. So, for welfare of the public, government should interfere, make rules and regulations. So, in case of monopoly, can I say there is underproduction? And therefore, there is a market failure. So, when I talk about the reason number 1 for market failure is market power. Under market power, there is underproduction. And if there is underproduction, there is a market failure. The next reason is externalities. Now, what do we mean by an externality? Externality means any detrimental or a beneficial impact on the third party. Detrimental means harmful impact, and beneficial means a useful impact. So, an externality can also lead to a market failure. Now, externality means any detrimental or a beneficial impact of 2 parties on the third party. Now, externalities can be of multiple types. It can be one directional, 2 directional, unidirectional or reciprocal. So, for example, you live in a society. Just next to your society, there is a building being constructed. Your mother works very hard early in the morning, cooks food. There is so much of heat. And in the afternoon, she probably desires to take some rest. So she plans to go and sleep. But as soon as she goes to sleep, do you agree that there might be some or the other noise which is happening in that building which is getting constructed? So that is called as a unidirectional externality. The pollution created by the constructing company is unidirectional. Now, will your mother go take some vessel and start banging in tang 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 tang? You created pollution, I will also create pollution. If both ways it is there, then it is called as bilateral. So, if it is one way, unilateral. Now, there can be a bakery, and adjoining to the bakery, there can be some chemical industry. So, the bakery creates air pollution, whereas the chemical industry creates or gives some chemicals in the nearby river. So, the bakery is creating air pollution, the chemical factory is creating water pollution. Do you agree? So, then that is called as reciprocal. So, externality can be unidirectional or reciprocal. It can be either positive or negative. Positive means beneficial impact on the third party, and negative means detrimental impact on the third party. Positive means it will give some or the other benefit to the third party. Negative means there is an harmful impact of that. So, in our syllabus, our entire focus is on negative production externality. So, you need to understand that externality can be created in consumption also and production also. In our chapter, we have negative externality on which the focus is a little more. So, there can be positive production externality, negative production externality, positive consumption externality, negative consumption externality. What will we be focusing on? We will focus on negative production externality. So, for example, there is a chemical factory which in its nearby river emits some chemical, polluting it. Now, this can have impact on both production as well as consumption. So, negative production externality can have an impact on somebody else's production, on somebody else's consumption. So, if there is a fisherman who wants to take some fish out, but those fishes are dead because of the chemical which is poured in that water body. So, it's a harmful impact on the third party. The same water is coming in my house, in my tap, in my shower. I had a bath with that water and my entire body has a skin disease. So, there is a external cost called as pollution, and hence we study the concept of social cost. Social cost is equal to private cost plus external cost. Do you think the producer charges for external cost? Do you think the producer internalizes the externality by charging the price of pollution to the consumer? Tell me, does the producer do that? Does the producer charge you external cost or only the private cost? Yes, dear students. The producer will not charge for the pollution that he has created, no. So he only charges for the private cost. Therefore, can I say in case of externality, there is overproduction. And therefore, market fails. Yes or no, dear students? Can I have a reply in the chat box? Are we clear with externalities? Exactly, Julie. So the first reason was market power. The second reason was externalities. In externalities, there can be production, consumption, positive, negative. We are specifically talking about negative production externalities. The third reason for market failure is public goods. So before we understand what are public goods, we need to understand the distinction between private goods and public goods. Now, private goods, example can be car, house, jewelry. Can I say in such goods, there is ownership? So, private goods are those goods in which there is ownership. Public goods are those goods in which there is no ownership. Private goods are those goods for which you need to pay a price. Therefore, we call them as excludable. Whereas public goods, there is no price. They are available for free. Therefore, they are called as non-excludable. So, if you want to purchase a car, it will have a price, and that is why it is called as excludable. A yes or no? Now, because there is price, will there be a free rider problem? Private goods, you need to pay a price, so there is no free riding. Nobody gets the commodity for free. But public goods are available for free. Therefore, there is a free riding problem. So, in private goods, there will be no free rider problem, and in public goods, there will be a free rider problem. Can I say private goods are rivalrous? What do you mean by the word rivalrous? Rivalrous means that benefit of the commodity will get reduced if one other person is using it. So, for example, if my wife is driving the car, she is getting benefited, she is enjoying that drive by driving the car. Now, at the same time, can I drive the car? So, if one person uses it, the benefit to other will get reduced. Such goods are called as rivalrous. So, private goods are rivalrous, whereas public goods are non-rivalrous. So, when my wife is driving a car, at the same time, can I drive the same car? No. That's a different thing, that my wife drives me crazy. But can I drive the car? No. If she is driving, I cannot. If I am using this mobile phone, can somebody at the same time use another or same mobile phone? No. So private goods are rivalrous, whereas public goods are non-rivalrous. For example, you go to a public park. The entry is free. If you go to the park, the entry is not restricted for another. Even he can enter the park. Yes or no, Preeti? So private goods ownership is there, public goods no ownership. Private goods are excludable, public goods are non-excludable. Private goods, since you have to pay a price, there is no free rider problem. Public goods, there is no price, therefore there is free rider problem. Private goods are rivalrous, whereas public goods are non-rivalrous. Yes, dear students. Are you all understanding? So, if I write down over here, rivalrous, non-rivalrous, excludable, non-excludable. So, you need to fill 4 columns. 1, 2, 3 and 4. So which goods are rivalrous as well as excludable? They are rivalrous also, they are excludable also. Such goods are called as pure private goods. They are non-rivalrous. They are non-excludable. Then there can be non-excludable, non-rivalrous. Non-excludable, non-rivalrous are pure public goods. Now, if a good is rivalrous and non-excludable or excludable and not rivalrous, then they are called as impure public goods. Yes or no? So how many category of goods are there? 4. Rivalrous and excludable, pure private goods. Non-rivalrous, non-excludable, pure public goods. Rivalrous but not excludable are impure public goods. And excludable but non-rivalrous are impure public goods. Sir, there are 2 impure public goods. So what are the example? Non-excludable but rivalrous impure public goods. I repeat, non-excludable but rivalrous public goods. The example can be a lake in which there are fishes. So if I go to a pond or a lake for fishing, I get 50 fishes. The benefit to other will get reduced. But entry in a lake is not restricted. So such goods are called as common access resources. Which are available for everybody. But if one person takes benefit of that, other person's benefit will get reduced. And goods which are excludable but non-rivalrous are called as club goods. In which, if you want an entry, you need to pay a price, cinema hall. So everybody who pays a price will get or enjoy the benefit. The benefits will not get reduced. If you go clubbing, if you go party, then the good is excludable but not rivalrous. The benefit received by all is equal. You joined Thankyou. It is an excludable commodity because you paid a price. But when I teach, the benefit is equal to all. A yes or no? Are we clear? So the third point is public goods. Public goods are always underproduced, and therefore there is market failure. And the fourth reason for market failure is incomplete information. See, complete information is found only in perfect competition, and perfect competition does not exist in reality. A yes or no? So many a times, since the information is not accurately passed on, there is a market failure. In this, you have studied a point called as asymmetric information, AI, not the AI that you know. Asymmetric information means one party has more knowledge, second party has lesser knowledge, and therefore there is a market failure. For example, a seller of a bike has more information about the condition of his bike than the person who purchases that second hand bike. Under asymmetric information, there are two concepts. One is called as moral hazards and the other is called as, tell me, what is the other one called as? Adverse selection. Adverse selection, sell of lemons, generally talks about second hand commodities, whereas moral hazard talks about because you are insured your car or your health, you start abuse of that property. A yes or no? So basically there are four reasons for market failure. Yes, sell of lemon goods, that is second hand goods, Preeti. Now, government's intervention is quite easy to understand. That can be done on self-study. For example, if you want to restrict monopoly, what should the government do? Rules and regulations, price capping. Government should start direct manufacturing of goods. Government introduced Competition Act. All these are the methods through which government interferes to minimize the market power. Then in case of externalities, the government has cap and trade policy. So can I say in case of externality there is pollution. Because of pollution there is overproduction of certain things. Therefore there is market failure. So government has introduced, there are two concepts. One is called as Pigouvian tax and cap and trade. So what can the government do? Government can increase the tax, which will increase the cost. So automatically there will be reduction in production and demand. And then there is a policy of cap and trade. So if there are 5 firms, firm A, B, C, D, E, Pigouvian tax does not solve the problem because it does not actually reduce the tax, no. Reduce the pollution. The motive is to reduce pollution. But because of a tax, you don't actually reduce your pollution. So cap and trade is a better technique. Suppose a company produces 10 units each. So total pollution is 50 units of pollution. So what can government do? Government can apply a cap that you are allowed only 7 units. You have to buy permits from the government. You will have to buy a permit from the government to create pollution. So automatically the pollution gets reduced to 35 units. Now to reduce pollution, either you need to reduce your production or you actually need to use technology, use certain pollution abatement mechanism, some mechanism which will reduce the pollution. So firm A purchased new machinery, firm B changed its technique, firm C did something to reduce pollution, but D and E did not do anything. So what happened? A, B, C could reduce pollution below the limits permitted by the government. These were still creating pollution of 10 each. Or more. So what can A, B, C do? Now they can sell their excess of permits to companies D and E respectively. So there is a cap and then there is a trade. Such policy is called as the cap and trade policy. So can I say ABC companies are encouraged? They will sell, it will reduce their cost, earn more profits. Yes, dear students. So unit 2 is done. Let's solve few MCQs. If you have any doubts, let me know in the chat box. I will again give you 5 to 7 minutes. In the meantime, I'll complete unit number 2. Few MCQs from year 2. Chalo, question number 1. What is the situation of market failure? Market failure is a situation where public goods are not sufficiently provided by the public sector. The market fail to allocate the resources efficiently. Very good, Faridul. Absolutely correct. What about Preeti, Vasant? Very good, everybody. The answer is C. The market fails to provide goods. Next, question number 2. Which of the following is an example of market failure? The answer is B. Merit goods are not sufficiently produced and supplied. So there is underproduction and therefore there is a market failure. Merit goods are those goods which are rivalrous also, excludable also, but they have very high positive externality like schools, colleges, hospitals, education, health. Next question number 7. The free rider problem arises because a free rider is one where you don't have to pay a price. So the good or a service is non-excludable and therefore there is a market failure. Next question number 8. A chemical factory has full information regarding the risk of a product but continues to sell. What is your answer for question number 8? Yes, tell me what is your answer. So there is asymmetric information. One party has more knowledge, another party has less knowledge. So your answer is A. Next, smoking in a public place. So if I am smoking, I am consuming, and because of my consumption of cigarette, can I say it will have a detrimental impact on the third party? So it is a negative consumption externality. Your answer is A. Next, which one of the following would you suggest for reducing negative externality? So we have studied Pigouvian taxes on pollution tax, etc. When will you give a subsidy when it is a merit good? When will you tax when it is a demerit good? Next question number 21. The production and consumption of demerit goods are. So if it's a demerit good, there is overproduction. So it is likely to be more than optimal under the free market. And therefore your answer is A. So these are the MCQs that I have covered from unit 2. Ask doubts if any. 5 minutes. If there are any doubts in unit number 2, let me know. Any questions, any queries? Post it in the chat box. That's wonderful, Faridul. I'll still give you a couple of more minutes. Go through the unit 2. If you have any questions, feel free to ask. Preeti, Manoj, Priya, Julie. Okay, Preeti. All right. So I think we'll go to unit number 3, the process of budget. What are the sources of revenue, expenditure management, and management of public debt? So beta, there is no word called as budget in our constitution. The article number 112 talks about annual financial statement. Annual financial statement is divided into 3 parts: consolidated funds, contingency funds, and public account. Now in that, one of the most important concept is consolidated funds, which in simple language you term it as budget. So is there any word called as budget in the Constitution of India? The answer is no. It is article number 112 which defines annual financial statement, which is a 10-page wide document which talks about the three documents, that is consolidated fund, contingency fund and the public account. So if I have to divide this budget into two parts, there are receipts and there are expenses. Expenditure. Receipts are further divided into two categories: revenue receipts, capital receipts. Then in expenditure also there are two categories: revenue expenditure, capital expenditure. So Preeti, what you are saying is absolutely correct. Revenue receipts are further divided into two categories: tax and non-tax. Tax is further divided into two categories: direct tax, indirect tax. Direct tax is further divided into two: personal income tax and a corporate tax. Indirect tax, GST, excise duty, service tax, import duty, etc. Then non-tax fees, fines, penalties. Then comes capital receipts. Capital receipts are divided into three parts: disinvestment, that is selling of public sector unit to private sector. Then there is recovery of loan. And then there is borrowings. So beta, revenue receipts do not create any asset or liability, whereas disinvestment reduces our asset, recovery of loan reduces our asset, and borrowings increase our liability. So the receipts which do not have an impact on asset or liability, the receipts which do not reduce our asset or increase our liability are called as the revenue receipts. Whereas the receipts which have an impact on asset and liability, which either reduce the asset or increase the liability, are called as capital receipts. Now, disinvestment and recovery of loan are non-debt creating capital receipts. They do not create a debt. They just reduce the assets. So they are called as non-debt creating capital receipts. Whereas borrowings are debt creating capital receipts. A yes or no? So beta, capital receipts are those receipts which have an impact on asset and liability. Capital receipts either reduce your asset or increase your liability. Those which reduce your asset are called as non-debt creating capital receipt, and those which increase your liability are called as debt creating capital receipt. Then revenue expenditure are those expenditures. So what will you say for revenue receipts? No reduction in asset, no increase in liability. Revenue receipts, no increase in asset, no reduction in liability like salaries, wages, administrative expenses, pensions. They neither create an asset nor reduce a liability. But under capital expenditure, there can be purchase of an asset. Purchase of land, building, machinery, shares. So because of this, assets will increase. A yes or no? Then at times the central government lends money. So loans given by the central government to state government, that will also increase your asset because loans are receivable. So when central government gives a loan to the state government, it is a creation of an asset because the state government is supposed to repay it back. And there can be repayment of loan. If you repay a loan, it will reduce your liability. So revenue receipts and revenue expenditure are called as revenue budget. Capital receipts and capital expenditure are called as capital budget. Revenue receipts, revenue expenditure do not have an impact on asset and liability. Revenue receipts do not reduce your asset or increase your liability. Revenue expenditure does not increase your asset or reduce your liability. But capital receipt, capital expenditure have an impact on asset and liability. Capital receipts will increase your liability and reduce your asset, whereas capital expenditure will increase your assets and reduce your liability. A yes or no? Is everybody understanding? Are we clear? Shall I go ahead to the next part? So because of that, there is a deficit in the economy. Now to understand the concept and different types of deficit, I'll write down over here a format. Suppose if there are revenue receipts, tax and non-tax. So what is the example of revenue receipts? Tax and non-tax, direct tax, indirect tax, fees, fines, penalties, dividend received, interest received is revenue receipt. For example, 3,000. Whereas the capital receipts or other capital revenue expenditure is rupees 10,000. Now revenue expenditure includes salaries, it can include pension, others, and it can include interest as well. So for example, salaries are 2,000, interest is 1000. Sorry, pension is 1000. Others is 5000. And interest is another 2000. So 2 plus 1 plus 5 plus 2 is 10,000. So what is your revenue deficit? Revenue deficit is equal to revenue expenditure minus revenue receipts. Revenue expenditure is 10,000 minus revenue receipts is 3,000. Therefore, your revenue deficit is equal to 7,000. Yes, everybody, are we clear? Now, in a budget, we have capital receipts and capital expenditure. Capital receipts are divided into debt creating and non-debt creating. So, non-debt creating capital receipts. What are the examples? Disinvestment, then recovery of loan. They do not create a debt. So let us assume that disinvestment is 5,000. Recovery of loan is 2,000. Then let's say, for example, we have debt creating as well. Debt creating capital receipt is borrowing. For example, we have borrowed 8,000. Capital expenditure is a total of 20,000. So total budget expenditure is 10 plus 20. 10 is revenue expenditure. 20 is capital expenditure. So your total expenditure is 30,000. But your receipts are 3 plus 5 plus 2, 10 plus 8 which you have borrowed, which is 18,000. So if you see over here, you see a deficit of 12,000. But in reality, can I say that borrowings is also what we required? We have actually earned 3 plus 5 plus 2. We have actually earned only 10,000. But the expenditure that we have is 30,000. So we are falling short of 20,000, of which 8,000 is borrowed. So in reality, how much is the nation in need of? Only 12,000 or 20,000? And that is the reason why we study fiscal deficit. Fiscal deficit is total expenditure minus total receipts, excluding borrowings. So what is your total expenditure? 30,000. What is your total receipts excluding borrowings? So let's not consider borrowings. 3 plus 5 plus 2 is 10. Therefore, your fiscal deficit is 20,000. You can write another formula for fiscal deficit. It is total expenditure minus revenue receipts plus नॉब हो गया नॉन डेट क्रिएटिंग कैपिटल रिसीट्स. So basically the formula will become total expenditure minus revenue receipts and minus non-debt capital receipts. So total expenditure is 30,000 minus revenue expenditure is 3,000. Non-debt creating capital receipt is 5 plus 2, 7,000. So your fiscal deficit is still an amount of 10,000. Yes, dear students. So we have first revenue deficit, second we have fiscal deficit, then there is a primary deficit. Is everybody understanding? Are we all clear? Are you sure? Lovely. So fiscal deficit is, primary deficit is fiscal deficit plus interest payment. Because fiscal deficit is financed by borrowings, and on that borrowings you are actually paying interest. So if fiscal deficit was 18,000, oh oops, it's not 18, it's 20. So if fiscal deficit is 20, interest payment is 2,000, then your total primary deficit is 22,000. Because to repay interest also you have taken a loan. Interest is paid on borrowings. To repay your past borrowings you have probably taken some amount in the form of loan. So there are three types of deficits: revenue deficit, fiscal deficit, and primary deficit. I hope I am clear. I hope you are aware about the documents, annual financial statement, demand for grants. Every state will ask, every ministry can demand for money from the central government. Finance bill is related to tax. Then there are three types of budget. What are the three types of budget, beta? First, receipts are greater than expenditure. If receipts are greater than expenditure, we call it as surplus budget. Second, receipts are equal to expenditure. We call it as a balanced budget. I think this is quite basic. Everybody understands this. And then we have receipts less than expenditure. We call it as a deficit budget. So, can I say that balanced budget is not a reality? Unbalanced is the reality. So, unbalanced has two types, surplus and deficit. So, can I say surplus budget should be used during inflation? Government should increase the tax and reduce its expenditure, and deficit budget should be used during recession. Recession is a downward trend. So during downward trend, reduce your taxes and increase government expenditure. Yes or no? Are we understanding? Are we all clear? Are you sure? Chalo, everybody in the chat box quickly give me a reply. So in this chapter or unit, I have covered three things. What is budget, revenue and capital budget? Then types of deficit and types of budget. These are the three important concepts. Chalo, everybody quickly give me a reply in the chat box. If we are clear, we'll go to the MCQs for unit number 3. Waiting for your reply. Quickly, please. Abu, yes, it is one shot for chapter number 7, and I will be starting with unit number 1 of money today. Tomorrow will be the last class in which I'll complete money and the international trade chapter. All right. Question number 1, the difference between budget deficit of a government and debt servicing. Servicing the debt means interest payment. So, beta, I think it's not plus interest over here. It is fiscal deficit minus interest payment. So 22,000, I think I gave you the wrong formula. So sorry about that. Reducing the interest payment is called as primary deficit. Now, we'll solve question number 2, 3, 4 so that we can get the answer. Revenue deficit is equal to revenue expenditure minus revenue receipts. So recovery of loan, capital receipt, borrowing, capital receipt. Other receipts, nothing mentioned, capital receipt. Expenditure on revenue account. So this is your revenue expenditure. Interest payment is also revenue expenditure, but we will not consider this because 24,500 is your revenue expenditure, which means 2,000 is already included in 24,500. So your revenue expenditure is 24,500, which includes interest. Your revenue receipts is 20,000. So your revenue deficit is 4,500. Answer is C. Then they have asked fiscal deficit. Fiscal deficit is revenue, capital total expenditure minus total receipts excluding borrowing. So total expenditure is divided into two: revenue expenditure, capital expenditure. So 24,500 plus how much is capital expenditure? 26,000, which is 50,500. Total revenue is also divided into revenue receipts, capital receipts. But we will not take borrowings. So revenue receipts are 20,000. Capital receipts includes recovery of loan, other receipts, but not borrowing. Excluding borrowing. Capital receipts include everything, but we want excluding borrowings. So capital receipts will be 1,500 and 5,000. So 6,500. So this will be deducted 26,500. And therefore your fiscal deficit is equal to 24,000, which is option B. And primary deficit is equal to fiscal deficit minus interest payment, which is 24,000 minus 2,000. Therefore your answer is 22,000. Yeah, are we all clear? Have we understood? And the last one, question number 5, Niti Ayog. Niti stands for National Institute for Transforming India. What is an appropriation bill? It gives the authority to the government to withdraw funds. So appropriation bill is the authority to the government to incur expenditure from and out of consolidated funds. When do we call a budget as unbalanced? Either when revenue exceeds expenditure or expenditure exceeds revenue. So there is budget surplus or budget deficit. So the answer is D, all of the above. Non-debt capital receipts are those do not create repayment burden for the government. So non-debt capital receipts are those that do not create any further repayment burden for the government. All right. So we are done with unit 3. Any doubts? Please ask. 5 minutes. If no doubt, we go to unit number 4. Do let me know in the chat box if you have any questions, queries, or doubts. That's wonderful, Preeti. What about others? Yes, Vasant, Abu, Priya. All right, I don't see any doubts coming, so I'll go to fiscal policy. Fiscal policy is announced by the government of India. It is a policy related to government's income and expenditure, taxes and subsidies. Fiscal policy is announced once a year by the finance ministry. Only in the year of budget, there are two budgets which are announced. One is called as interim budget. The other is called as the final budget in the year of election. Now, when I talk about fiscal policy, it can be discretionary or non-discretionary fiscal policy. Discretionary means non-automatic. That means government will deliberately take certain efforts. And non-discretionary means automatic. That means fiscal policy has inbuilt mechanisms like a progressive tax. So during the time of expansion, we want the economy to contract, and during the time of contraction, we want the economy to expansion, contraction. So during the time of expansion, we want economy to contract. During the time of contraction, we want the economy to expand. So there are two types of fiscal policy: discretionary fiscal policy, non-discretionary fiscal policy. Discretionary means non-automatic stabilizers. Non-discretionary means automatic stabilizers. Non-automatic or discretionary means government will deliberately take certain efforts, whereas non-discretionary is automatic. So government's fiscal policy has some inbuilt mechanism to avoid the problem of expansion and contraction, inflation and recession. So if there is inflation, the taxes will automatically go up because there is progressive tax. So it's an automatic stabilizer. During inflation, there will be lesser unemployment, so lesser allowance is given to the people. Government's expenditure will be less. Automatic stabilizers. Yeah, are we all clear? So, if I have to speak about fiscal policies, there can be two more concepts. expansionary fiscal policy, and there can be contractionary fiscal policy. Expansionary is used during recession and contractionary is used during expansion. What will the government do? During the time of recession, government will reduce taxes and increase its expenses. And during the time of expansion, it will increase taxes and reduce its expenditure. So tax and expenditure are not the only tools. So what are the tools of fiscal policy? One is obviously tax. Second is expenditure. Third is debt, that is borrowings. And the fourth one is budget. We have already discussed what we will do in tax. Expenditure is also done. Now what should the economy do during the time of recession? Internal debt should be reduced and external debt should be increased. So if I have to talk about borrowings, there is internal debt, there is external debt. Now internal debt is within the country, external debt is outside the country. So if there is recession, internal debt should be reduced, external debt should be increased during recession. This will increase the supply of money in our country. And internal debt should be increased, external debt should be decreased during the time of expansion, because we want to reduce the money supply. Budget, I have already discussed. During inflation, the government should announce surplus budget. And during recession, the government should announce a deficit budget. So during surplus budget, the government will increase tax and reduce its expenditure. Whereas during deficit budget, tax will be reduced and expenditure will be increased. A yes or no? So what are the tools of fiscal policy? There are four: tax, expenditure, debt and budget. Now expenditure can be of two types. There is pump priming and compensatory spending. Pump priming is a temporary investment made by the government. Pumps the money in the economy for short period of time. So if there is a recessionary trend, the private sector will not invest. If private sector is not investing, then the government will do investment, and as soon as the private sector investment starts, government will withdraw its investment. Such type of investment is called as, or expenditure is called as, pump priming. But there is another type called as compensatory spending. So in an economy, government had estimated 10,000 crores of expenditure by private sector. But private sector, unfortunately for XYZ reason, had invested or had an expenditure of only 7,000. So there is a gap of 3,000 crores. Who will compensate this? The government will compensate. This compensatory spending is long term in nature. So there is pump priming and there is compensatory spending when I talk about expenditure. Then there is a concept called as crowding out. So if you take a jug in which you fill water, you keep filling water, you keep filling water, you keep filling water, what will happen? It will overflow. So some water will get out. Similar is with the concept of crowding out. During the time of recession, private sector is not encouraged, it is discouraged. So its investments are very low. So government starts spending. For government spending, government borrows. Now during the time of recession, the rate of interest is less. So government borrows a lot of amount and starts spending in the economy. Slowly and steadily the economy is on the path of recovery. And the government is still borrowing and investing the money in the economy. So what happens? Because of excessive government borrowings, there will be a rise in the rate of interest. And private sector is interest sensitive. So beta, if private sector is interest sensitive, will they take a loan at a very high rate of interest? No. So because of government spending, government borrowing, there is a rise in interest rate. Now at this higher rate of interest, the private sector is not motivated to borrow money, and therefore private sector is crowded out. And that, my dear students, is the concept of crowding out. So with that, we are done with unit number 4 as well. Let's go ahead and solve a few MCQs. Chalo, what is your answer for question number 1? I hope everybody is clear, everybody is understanding. Hey, give me a lovely. That's wonderful, Preeti. What about others? Preeti, Priya, Abu, Vasant. Nobody is replying only. Ayyo. All right. So give me the answer, Preeti, for question number 1. Fiscal policy refers to government spending. True. Taxation and borrowings to influence the level of economy. This is correct. This is not correct. Neither is this. So your answer is A. Which of the following is likely to happen in expansionary phase? Expansionary phase means during the time of inflation. So what will happen during the time of inflation? Employment will rise, unemployment will not. So there will be a falling unemployment rate because people will get employment. So this is correct. Rising inflation rate is correct. Deflation is incorrect. Falling wages is incorrect. Increasing tax revenue is correct because in inflation people are employed. Therefore their taxes will be more. So your option B, C, F are most likely to occur. Therefore your answer is B. Next, question number 4. During recession, fiscal policy should be directed towards. So if there is recession, there is a downward trend. So the money supply is less. We want to increase the money supply. So can you increase the money supply by increasing taxes? No. So if there is downward trend, decrease the taxes and ensure higher disposable income. Now even better is option C, increasing government expenditure and increase. Oh, no. That is not correct. So I think the answer is B. decreasing government expenditure and increase and ensuring higher level of disposable income. Next, according to Keynesian economics, when we have inflation, effective fiscal policy should not include so please think about question number 5 and give me a real quick answer. So if there is inflation, in corporate tax should increase, correct? Decrease the effective demand, then inflation will reduce. But if government spending increases, it will be like adding fuel to fire. So your answer is C. Next, private. Which of the following statement is true about crowding out? So what is crowding out? Crowding out is a situation where there is decline in private spending partially or completely offset by the expansion of demand resulting from an increase in government expenditure. Can be true. Crowding out is a negative effect, correct, which may generate when money from private sector is crowded out to public sector. No, crowding out does not mean public to private sector. It means because of public sector investment, private sector is crowded out. And when government, third option is when spending by the government in an economy increases, government spending will be crowded out. Even this is wrong. Because of government spending, private sector spending is crowded out. So B option, if you read carefully, can be true. And fourth one is also correct. So your answer is C. Private investment, especially ones which are interest sensitive, would be reduced in if interest rates. So question number 12, the answer is option 1, 2 and 3, which is option C. Yeah, are we all clear? Chalo, you again have couple of minutes. If you have doubts, please ask. If not, then I'll go to the next chapter, that is money and banking. The name of the chapter is money market. Yes, Preeti, if you have any questions, please let me know in the chat box. Vasant, I don't know if you are there in the class, but I hope you are clear. If at all you are there in the class. Yes, Preeti, any questions, any queries, any doubts? Please let me know in the chat box. Waiting for your reply. Shall we continue? Give me a yes or a no. All right. Then I move to the next part of this chapter, which is by the name of money market. In money market, unit number 1 talks about demand for money. So money is a medium of exchange. Money has 4 features or 4 functions. Money is a medium, measure, standard, store, medium of exchange, measure value, standard of deferred payment or a delayed payment, and finally it has store value. Earlier we had barter system, but in barter system there were many challenges: lack of double coincidence of bond, problem of deferred payment, there was no measurement value, no store value, there was problem of indivisible goods. So over the period of time, from barter system to metallic money, from metallic money to paper, paper to bank, bank money to plastic money, and plastic money to e-money, the money market has evolved. What are the functions of money? Medium, measure, standard, store. What are few qualities of money? That should be durable. Money should be scarce, effortlessly recognizable. It should be generally acceptable, portable, divisible into smaller parts, uniform. All these are the concepts, basics about money. Now, when we talk about demand for money, under demand for money, we have theories to understand the demand for money. So, beta, what do you understand by demand for money? Demand for money is the amount of money that a person wants to hold for the purpose of spending. So, you need to remember this. Demand for money is the money held for the purpose of spending. So there are 5 to 6 theories. The first theory is cash transaction approach, given by classical economists like Irving Fisher. He was from Yale University, wrote a book by the name of Purchasing Power of Money. He said that money is demanded only for one purpose, and that is transaction purpose, which is nothing else but a medium of exchange, in which he gave an equation MV is equal to PT. So beta, T for number of transactions, P for price. Suppose in the economy there are 1000 transactions, price is 5, so total money required is 5000. So does the RBI or government need to issue 5000? No, that depends on velocity. So suppose if the velocity of money is 10 times, Velocity means how many times the money exchanges hands. So if the velocity of money is 10, then only 500 rupees needs to be issued. So M stands for money circulated in banks or money circulated. V stands for velocity. P stands for price. T stands for number of transactions. But money nowadays is also circulated in banks. So the formula becomes MV plus M dash V dash, which is equal to PT. Yes, dear students. So under cash transaction approach, money is held only for one purpose. That one purpose is medium of exchange transaction. Next, we don't keep money only for transaction, but we also keep for precaution. So there is a cash balance approach given by neoclassical economists like A.C. Pigou, Alfred Marshall, Cambridge University. They are from Cambridge University, wherein they say money has two functions, medium and store. So transaction and precaution, where MD is equal to KPY. So total money demanded in the economy is a proportion of your income. So I need 20% of my income in the form of precaution. So how much is the money demanded as a precautionary motive? So money demanded is equal to K PY. K is a constant, PY is national income. So money demanded is 20,000. Then there is a liquidity preference theory given by Professor J.M. Keynes. He says that money is demanded for three motives: transaction, precaution, and speculation. The money demanded for transaction motive is dependent on elastic, is dependent on income. More the income, more will be the money demanded for transaction and precaution purpose. Lesser the income, lesser the demand for transaction and precaution purpose. So transaction and precaution are dependent on income, but they are not dependent on income according to Keynes. According to Keynes, if the rate of interest is high, then the demand for transaction and precautionary motive will remain constant. Just because the rate of interest is high, you will not take money from your transaction and precaution motive to spend it for speculation. A yes or no? And speculation means to speculate and earn profits via stock markets, bonds. If the rate of interest is less, still the demand for money for transaction and precaution will remain constant. So beta, transaction and precaution are income elastic, means dependent on income, whereas they are interest inelastic. But speculative motive, it is income elastic as well as interest elastic. So when I hold money for speculative purpose, it is dependent on interest. If the interest rate is high, then money demanded for speculative purpose will be less. I will hold less money, invest more money. And if the rate of interest is less, then the money demanded will be more. So the relationship is inverse, and therefore the curve is downward. At a higher rate of interest, money demanded will be less. So if rate of interest falls, money demanded rises. If rate of interest falls further, money demanded will rise. It keeps on falling, money demanded will increase. So as the rate of interest falls, the money demanded for speculative purpose will increase. So there is an inverse relationship, and Keynes believed that rate of interest will never go below 2%. And beta, if rate of interest does not go below 2%, people will hold money in anticipation, in expectation that the rate of interest will rise. So they will hold all their money, and that will result into a liquidity trap. So when I talk about speculative motive, higher the income, higher the demand for speculative motive. Lower the income, lower the demand. So direct relationship curve is upward. But when it comes to interest, it is income elastic, interest elastic, but under interest, the relationship is inverse. At 2% rate of interest, the market will face liquidity trap. Hey, are we all clear? Now post Keynesian. Hey beta, can I have a reply in the chat box? Are we clear? Have we understood? So we have done 3 theories till now. One is cash transaction, other is cash balance, the third one is liquidity preference theory. I hope you know that there is an inverse relationship between two financial assets. If the rate of interest for bonds rises, the returns on FD will fall or stock market will fall. There is an inverse relationship. So if stock market prices rises, there will be a reduction in bond market, because people will withdraw money from one and invest it at another place. Now there is post Keynesian development, which is inventory approach given by Baumol and Tobin. Now Keynes believed that money is demanded for separate purposes like transaction precaution and speculation. But Baumol and Tobin said money should be demanded as a real cash balance, that is as a stock, that is as an inventory, not as separate purposes, transaction precaution and speculation. According to Keynes, money demanded is dependent on income and interest, but according to Baumol, money demanded is dependent on income, interest and cost of transferring near cash balances into, in simple language, this is brokerage. Keynes believed that money demanded for transaction function is not a motive of interest, whereas Baumol said money demanded for transaction is the function of interest. So if you are getting higher rate of interest, you don't have to decide only that this is transaction precaution and speculation. Invest that money in market, get returns and withdraw whenever you want to use it for transaction and precaution. So beta, if transaction cost is more, that is brokerage fee is more, then the investment will be less because I'll have to pay more cost. Therefore, I will hold more money, so demand for money will increase. If transaction cost is less, then I will invest more and therefore demand for money will fall. We already know interest and money demanded, inverse relationship. If opportunity cost of holding money is more, should you hold or you should invest? If I hold and I lose more, then I should not hold. So if opportunity cost is high, money demanded should be less. Relationship is inverse. If the transaction cost is greater than returns, returns are less, transaction cost is more, then you invest less and demand more. A yes or no? If transaction cost is equal to returns, I might not invest. I will hold the money. But if transaction cost is lesser than returns, then I will definitely invest more and demand less. Then came Milton Friedman with his quantity theory of money, where he said that money can be used after financial assets into physical assets. Physical assets have two advantages, that is permanent income and relative return on asset, that is appreciation. So according to Milton Friedman, see, there is transaction, precaution, speculation. You can hold money in cash, you can invest in bonds, you can invest in stocks. Bonds will yield you interest, shares will yield you dividend. But even after that, you are left with money, then you should invest this money in physical assets like property, because property will give you permanent income and it will give you capital appreciation. And then the last theory was demand for money as a behavior towards the risk, which was given by Tobin. He says that risk bearing ability is different for different people. Few people will take more risk, higher the risk, higher the returns, lower the risk, lower the returns. But people will change. When I was not married, I was a risk taker. But now I am married, I am already at risk. So I take lesser risks in my life. And also the taste of the individual will change. Yes, Preeti. Now my father believes in property. My father believes in gold. So he says whenever you have extra money, invest in gold, silver, invest in property. But I am a believer of mutual funds. I am a believer of stock market. So can I say that everybody's risk taking ability and taste is not the same? So if the risk bearing capacity is more, you are a risk taker. Higher the risk, higher the returns. So you will invest more, the demand for money will be less. And if the risk bearing ability is low, then you will hold more money with yourself. A yes or no? So in total, there are 6 theories in unit number 1. What are the theories? One is cash transaction approach, cash balance approach, liquidity preference theory. Then the fourth one was by the name of Baumol and Tobin's approach as inventory approach to money. Then the fifth theory was Milton Friedman's restatement of quantity theory of money. And finally, the last one was demand for money as a behavior towards the risk. And with that, we have completed unit number 1. Your homework will be to solve MCQs of chapter 8, unit 1. Because of lack of time, I will not be able to solve these MCQs, but if you have any doubts, I will be there for you. I hope we all are clear. I hope you all have understood. So that's it from me today. Thank you so much. Please like, share, subscribe, comment, hit the bell icon. We meet tomorrow for the last time, in which we will cover the rest part of chapter number 9, 8 and 9. Any doubts, please let me know in the chat box. Thank you, Preeti. Good night. Bye-bye. So that's it from me. Thank you so much. I request you all to kindly like the video if you have understood today's class. I'll take your leave. I'll see you all tomorrow one last time.